Atlassian TEAM Stock surged after Q3 results forced investors to rethink a beaten-down software name. The move was huge because the stock had already lost more than half its value in 2026 before the earnings surprise. Atlassian reported $1.787 billion in revenue versus $1.696 billion expected, with earnings per share of $1.75 versus $1.33 expected. The question now is whether the beat marks durable demand or a sharp relief rally after a brutal reset. The immediate pressure is that the rebound needs cloud growth to keep holding. The reason this deserves attention is that the stock had fallen more than 50% in 2026. Read the event through this lens. Atlassian surged after a large Q3 earnings beat. The confirmed baseline is a 23% per market jump after fiscal Q3 2026 results topped expectations. Cloud revenue grew 29% year-over-year, faster than the prior quarter and above consensus expectations. The service collection passed $1 billion in annual recurring revenue while growing more than 30%. Remaining performance obligations rose 37% year-over-year to $4 billion. Those facts put cloud revenue grew 29% year-over-year. Beside RPO rose 37% to $4 billion. That baseline keeps the segment grounded before the mechanism takes over. The factual floor is cloud growth, and guidance lifted the software story. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is cloud commitment and enterprise platform expansion. Customers are signing larger and longer agreements on Atlassian's AI-powered platform, which supports revenue visibility. In plain English, investors saw stronger demand for the platform at a moment when they feared software growth was weakening. Atlassian TEAM Stock matters here because acceleration changes the story from pure sell-off pressure to a test of cloud durability. The operating detail is that AI-powered platform deals are getting longer, while cloud growth beat consensus expectations. That is the part viewers need before judging the headline. The mechanism stays concrete because larger customer commitments improve revenue visibility. The affected side is software investors using Atlassian as a read on enterprise cloud and AI platform demand. Management raised full-year revenue growth guidance to 24% from 22%, while also improving cloud, data center, and margin expectations. That gives bulls a stronger case, but free cash flow still missed expectations because restructuring payments weighed on the quarter. The company is also cutting about 1,600 roles, roughly 10% of its workforce, to fund more AI and enterprise sales investment. The practical effect lands on software investors because full-year revenue growth guidance rose to 24%. The secondary read is that free cash flow missed because of restructuring costs. The effect is not abstract. Software investors now reassess enterprise cloud demand. The unresolved piece is whether the restructuring improves margins without hurting execution. Free cash flow missed by 31%, and another $76 million in restructuring-related payments are expected in Q4. The useful proof will be sustained cloud growth, margin improvement, and revenue that is not overly dependent on timing benefits. A 23% jump does not erase the need to prove operating leverage. The clean split is that the Q3 beat is confirmed, while margin follow-through still needs evidence. The unsupported leap would be this: the jump does not prove lasting recovery. The clarification needed is Q4 savings and cloud growth will clarify execution. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is Q4 margin progress and whether cloud acceleration continues. For Atlassian TEAM Stock, the watch items are restructuring savings, cloud growth, data center timing, and larger customer commitments. If those line up, the rebound has evidence behind it. If not, the rally may have pulled forward too much optimism. The beat was real, but the execution test now starts. The decisive test is watch Q4 restructuring savings. That matters because operating leverage supports the rebound. The next stage should be judged by cloud growth and margin data, not by guesses.